You've been surprised by how, I guess, strong the consumer has been with all these factors occurring.
Yeah, well, by definition, I've been surprised because, did I think that the savings rate, for example, was going to come all the way down to 3.5%? I mean, the pre-COVID norm was 9%. We're at 3.5%. And yeah, this is just a interesting commentary on human behavior because we went into the pandemic with over half of American households, close to two-thirds, didn't have enough savings to even get through 3 months of idle economic activity. And that's why the government felt so compelled to provide so much cash stimulus. And I think the view, and this was also all sorts of academic research and Fed research showed that, people tend to save half, spend half. So they went big because the government wanted people to spend more. And if you go back to that period, in the opening months of 2020, I mean, there was a day where the front oil price contract went negative. We were talking about deflation. And that was then, but the government went big. But everything got spent. And that I think was the big surprise. The big surprise is here we're sitting today that we're at a 3.5% unemployment rate. If you look at the average over the past 10, 20, 30 years, it's more like 8%. And just before COVID hit, it was 9%. So, that I think was the big surprise. The big surprise was, that we experienced something called YOLO. YOLO, right? YOLO, you only live once. Fill up that bucket list. And that's the psychological impact of COVID. You only live once. So YOLO for Main Street was what FOMO was to Wall Street. You only live once. Anger spending. And so that was really the primary story. Now, the thing that we have to consider is that Fed policy hits the economy with long lags, and the lags historically are 2 years. So we haven't seen the full impact of what the Fed has already done. That's going to be staring us in the face at a time when this fiscal stimulus that's kept the Energizer Bunny, that I like to call the consumer the Energizer Bunny, but I think the batteries are going to run out by the time the fourth quarter rolls around. And at this point, that's a little more than a month away. So what you see today, I don't think it's going to be what you see tomorrow. It reminds me a lot of 2007. I'm at Mother Merrill. I'm calling for recession, but I am crazy early to a fault. And everybody's asking, where's the recession? Where's the recession? But if you go back to that period of 2007, what kept the Energizer Bunny alive back then wasn't lagged impact of fiscal stimulus or excess savings. It was the lagged impact of the housing boom. So as you were trying to wonder, how is it that, the Fed took the funds rate at that point from 1% at the low to 5.25% at the high, and you're trying to explain to people that, look, this is a credit-driven economy, that interest rates matter. But look, throughout all of 2007, remember, the recession didn't start till December of 07. And throughout the whole year, people like me were wondering, where's this recession already? And that's the question that I was receiving almost every single day in 2007. And next thing you know, it starts December 2007, which most people didn't even see happening, nor like when you go into the summer of 08, before Lehman and AIG and Merrill, the soft landing view was still winning, even though the NBER dated the recession to December of 07. But you see, what kept the Energizer Bunny going, as I digress, was other acronyms called MEW. Do you remember MEW, Anthony? Do you remember MEW? Mortgage equity
No.
withdrawal, cash out refinancings. So that kept the consumer alive. We were seeing the last vestiges of the housing bubble boom providing cash flow, the last vestige of support for the consumer until it ended. And anybody who was willing to superimpose or extrapolate 2007 into 2008 summarily got their heads chopped off. And I think we might relive that. Anybody who's extrapolating what happened this year into next year, especially as the fiscal stimulus fades, the lagged impact fades, is summarily going to get their heads chopped off. But everybody seems to be doing that. Everybody, I mean, you asked about the stock market. The stock market does not have my macro forecast. The stock market has gone hook, line, and sinker into the soft landing camp, as practically every economist has in the past few months on Wall Street.